Hi, in this video I'll give you 5 amazing tips on what to do in order to protect your capital during a market crash. You will learn what are the right steps to take so you don't get burned just like many other traders. Every now and then, events like this occur in the markets and knowing how to react is a massive advantage. Stay with us until the rest of the video and you will be prepared for the next one to come. Before that though, don't forget to subscribe to our channel so you don't miss out on any valuable information. Like I said, in this video I'll give you 5 tips on what to do before a possible market crash and how to prepare for it. First of all, you've probably already heard that stocks are currently overpriced and they can't continue the bull market forever, meaning that there will be a market crash soon. And yes, there will be one. This is inevitable, but nobody can say when this event will occur. What we can do though is to prepare for such an event so we don't get affected in a bad way. This type of scenario in the market has happened before and it will happen again. That's something normal and in future it will make sense as it would be just a market correction. But when this correction is happening right now and we are active during the event, there's a big chance that if we're not prepared, we could lose a decent portion of our capital, or worst case, all of it. That's why we say it's very important that we know what is currently happening in the market and how we should react in a certain type of scenario. Firstly, let me start with why is it that so many people are losing during market crash? And that's exactly because there's lack of preparation, meaning that a lot of people are entering the market while it's in a strong bullish trend and they're not even thinking about a possible major correction or a market crash. Most of them are expecting their investments to constantly grow without considering if a market sell-off happens, where would they exit and how long would it last. That's why our perception on how long a market crash will last is quite important. If you look at the stocks of any company in 2008, you will see that they experience a serious decline in price. But if you look at it on a monthly chart, right now you will see it looks just like a normal market correction. This is Amazon's chart, one of the companies that also had experienced a big decline in price. However, nowadays they're trading 100 times more expensive than what they used to cost back then. Right here in 2008, before the market crash happened, the stock's cost used to be just under $100, and after the market crash, price went as low as $35. Right now, one share of the company cost as much as $3,000. Imagine if we bought when price was $100 and then goes down to 35. A lot of people would probably just close out their positions and never look at this stock again. This will result in a loss even though price would have continued growing in the long term. And that's why we should have an idea for how long we're investing our capital and what could happen during this period of time. I'd like to touch on a very important topic, and I mean what is your relationship with the broker that you're using? How do you communicate with them and what advices do you get from them? Many of the brokerage firms are contacting their customers, explaining to them how a certain company is overpriced and, for example, how indices are about to go down as well. And that usually happens while the market is in a strong uptrend, meaning that investors who are not very experienced are deciding to sell their CFD positions while price continue rising and therefore they experience big losses. So again, be very careful what information you get from your broker as well as from the websites in general. Before taking any investment decisions, always make sure to do your own research. And now we move on to the next part of this video, how to prepare. The fact itself that we're talking about preparation and understanding that there might be a market crash anytime soon is already some kind of preparation, right? Because you're expecting it to happen and you will know what you have to do in order to protect your capital. Knowing that such an event is due means that you can start planning ahead of it. Okay, let's begin with the 5 tips that I'll give you for today. The first one, and probably the most important one, is to diversify your portfolio. What do I mean by that? You have to diversify in different stocks. Again, I'll give an example with a quite popular company, Tesla. Its price just skyrocketed in 2020, and a big portion of new investors are already involved in that wave. And that means a lot of them are currently seeing big profits. Now, these profits are lovely when price is growing. However, you shouldn't be investing in one company only. And if you are profiting big time on a stock, then you should be taking part of the profits at a certain time. If Tesla was 10% of your portfolio, then currently that position has probably grown to about 20 to 30%. Now, I would say this is the time when you should be taking some of the profits away or diversify in other companies that aren't overpriced but at a normal market price or maybe even underpriced. And if there's a market crash, then you wouldn't experience big losses. So, when we're talking about diversification, we are talking about diversifying in a different companies. We should also be looking at companies that are undervalued and are expected to be the next Tesla story. But again, that doesn't mean you should be investing all your capital in one company, which in theory hasn't actually fully developed. Investing just a part of your capital in such company is totally enough for you to back profits if it shoots like Tesla did. Okay, another way to diversify is in a different instrument. And also, it's always good to be sitting on cash, and I will explain why in a minute. Other sectors such as real estate, different type of insurances, and commodities. Now, taking the best investment decision for yourself, such as in what exactly to diversify and what percentage of our portfolio to invest, is strongly based on your age and risk appetite. There's no universal formula as to what and how to invest, as this is individual for each one of us. Please share with us in what stocks have you invested and what portion of your portfolio is currently active. Also, if you have any questions, don't hesitate to ask them in the comments below. Moving on to the second tip, invest consistently. I'm going to talk about the dollar cost average strategy, which is great, especially when the market is at all-time highs, because that's not the time when we should be investing large amounts of money. It's much better to invest periodically and consistently. This could be every month, every 3 months, or even once a year. So basically, what's the idea behind all that? For this example again, we will look at Tesla's chart. You have to pick a time when you will start investing and essentially how often you will invest. So let's say we started investing in 2018, right here at all-time highs. If we had invested as much as we possibly can in one big position, because let's say we were expecting price to continue growing, then you see what happens after that is the stock is actually losing value for a long period of time. And during this time, obviously, we wouldn't be very happy with how things are playing out. Let's say price then comes back to our entry level. There's a big chance that we would have just closed our positions in a small loss or a break even, take our money out of the market and look for another opportunity where in fact we could face the same case scenario. So the dollar cost average is all about investing smaller amounts but periodically and consistently in companies that we expect to grow in the long term. So we don't have to experience big drawdowns just like in this case. That would mean you buy here, then again, let's say in 6 months' time you buy, and then again you buy here where price is actually cheaper, and that's all you're doing. And that's how you average the share price. Because even if you bought here at all-time highs, you also bought down here. Later on, when price shoots, you can add to your positions, but now you also have entries at a lower price. and that guarantees you bigger profits from the long term move. And of course, when we have this case scenario, no matter what company it is, you will be in profit. But when price starts declining and you see something like this, then what would you do? Would you exit all of your positions or would you continue investing? And that should be decided beforehand. Apart from diversification and dollar cost average, you can also hedge your positions if you're expecting a major market sell off or if there's one already. This could be done in two ways. One of them is if there is a correction currently happening, you can sell and then buy once price is significantly lower. And another way is to trade with CFD and to take advantage directly while the sell off is happening. An important thing here is that this means it will take some screen time and you will have to be on the charts and manage your positions actively, which also means that you will have to have a certain knowledge. So I would say this is not the best option for investors with less experience and not enough time to be on the charts. Because if you don't have any knowledge on technical or fundamental analysis, then you might actually increase your losses. So you might as well just leave your stocks as they are and wait for the storm to pass. Now, if you have any additional questions, you can always contact us or comment down below. Okay? Next tip is very important, and it doesn't matter how, when, or what you're trading. You must not attach any emotions to none of your investments. I fully understand that it's not as easy as it sounds because at the end of the day, it's all about money. But as long as you don't take any emotional decisions, you should be alright. One thing I would say is to always remind yourself what you own, meaning that there's nothing to worry about if you know you own an asset that will be performing well in the long term. So, if you know what to expect for a certain period of time, you wouldn't be bothered about any pullbacks in price and so on. And again, I come back to why we should be prepared beforehand. This will give us more confidence and it will eliminate emotions as much as possible. If we hadn't planned our investments though, we would probably panic and start selling, losing all of our profits gained so far and maybe even go into a loss. I think reacting emotionally during market crash is the worst thing you can do. Panic selling and closing out positions during market sell-off, which then turns out to be just a few days event, is really bad for your portfolio. You exit all of your positions because you expect price to reach lower levels and then you want to buy, but you might never see those levels anyway, and then you end up buying at a higher price again. So that's how investments based on emotions are normally one of the biggest mistakes and result in a negative balance. That usually turns into trading and investing with no idea and plan behind it. And as you can imagine, you can't really make money that way. Nowadays, new investors are kind of just picking the best performing stocks and they buy them. They make some profit, but the thing is, they don't know how to react once there's a market correction. A perfect example of this could be the GameStop company, which has blown up and everyone who had positions right down here at the bottom had gained some profits. But all the people that decided to get involved during the spike in price, because you can be sure there were people buying the stock at around $300–400 mark. All of them had realized significant losses in the next few days. And that's what I mean by emotional investing. Those people didn't know what and why they're buying. They just wanted to find something that's going up. And the last tip is to buy the bottom. We can do that only if we have some free cash, as we said earlier. We would need it when we find an instrument that is undervalued and is at a cheap price. By doing this, we could make big profits and sometimes in a short period of time. It doesn't mean that every time we see a pullback, then this would be the market bottom. Again, here we would need some skills and knowledge to identify the bottom. Also, we have to have a clear plan and to know what and why we're buying. Something else to remember, Do not invest all your free capital into one company and one position. So, how do we buy at the bottom? Once we pick a company and we know what to expect and we have a reason to buy, then we can start adding multiple positions during the pullback. And that's how we get an average price. But this is only for the companies that we expect to perform well in the long term. And even if we have other long positions before that, we could still add some more as long as we know that we invest in something that is going to grow in future. And don't forget that at any time, the pullback could be bigger than what we currently see on the chart, because most of the stocks are currently overpriced and we should be diversifying in other companies that are undervalued and are about to start gaining strength. Now, if 2020 taught us something, is to expect everything and to be ready. And one thing to expect is a possible market crash, for which we should be prepared at any time. Remember, we don't want to react emotionally and lose our capital, but to be prepared and do the best we can so we can maximize our profits. The best investment move we could do today, tomorrow, or at any time is to build an investment strategy which is tailored to our age and our risk appetite. Okay, so comment down below what's your way to prepare for a possible market crash. Do you expect one? And if you like the video, give us a thumbs up, share it with someone, and ask us any question you like. Thanks for watching. Please don't forget to watch our last 2 videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading and I'll see you next time.